A set of numbers that came out just in the dying moments of trade yesterday. Indian Oil Corporation reported the biggest drop in EBITDA in 3 years. The refinery shutdown, weak market volumes, and higher inventory losses hurt the numbers. Sumit Sarkar is here with some detailed analysis. Sumit, we saw the initial numbers yesterday. Probal mentioned that the numbers were below estimates. Some details.
Well, it was a very weak quarter for Indian Oil Corporation. Revenues were down nearly 15%. EBITDA declined by 57%, with the biggest drop in the last 12 quarters. EBITDA margin slipped to 3.2%, while the net profit was down nearly 84%. Now, refinery shutdown, weak sales volume and high inventory losses impacted the quarter. Now, the gross refining margin, that came in at around $1.28 per barrel versus $4.69 per barrel. Now, this is despite the fact that the benchmark, that is the Singapore gross refining margin, jumped the most in over 8 years. Now, the crude throughput, that increased marginally to 17.5 million metric tons, but this was way below analyst expectation. Now, this was because of an unplanned shutdown at the Panipat refinery in the month of September. On the marketing side, if you see, the sales volume were down nearly 6.4% to 20.2 million metric tons due to weak demand in the economy. Now, if you see the segmental EBITDA, you can clearly see how these factors have impacted the numbers. Now, the refining EBITDA turned negative, while the marketing EBITDA declined by nearly 16.5%. That too in an environment where the Singapore gross refining margins were trending higher and the marketing margins were also higher compared to last quarter. Now, due to lower average crude prices, the company incurred an inventory loss of close to 1,200 crore rupees as against an inventory gain of 1,233 crore rupees in the last quarter. While due to adverse forex movement, it also incurred a foreign exchange loss of close to 1,100 crore rupees versus a foreign exchange gain of close to 100 crore rupees. Now, these two factors also impacted the operational numbers and the bottom line numbers in the second quarter of financial year 2020. Lastly, on the balance sheet side, if you see, its debt increased by nearly 11% to close to 80,382 crore rupees. So the management commentary on the same will be important to watch out for in the conference call, which will be held today at 3 p.m. Along with that, the level of pending dues from government, companies' view on IMO and marketing margins going forward, current marketing margins and the sales volume outlook would be important to watch out for from the conference call today for Indian Oil Corporation that will be held at 3 p.m.